Thank you so much for joining us today here on a Thursday. I'm Marlon Bowling with you. I am joined by Ted Seifried of Zaner Ag Hedge in Chicago, and we take a look at our market action. Ted, this morning we had the weekly export sales numbers that came in from USDA. In case our viewers or listeners just happen to tune in, let's review real quickly. And on the weekly numbers, we had the corn at 985,600 tons last week, soybeans 399,200 tons. Both of those were off sharply from what we had a week ago. And the wheat, 523,000 tons, was actually above expectations. Or no, it was in the range of expectations, I'm sorry. Anyway, your thoughts on the weekly numbers that came out. Did they have much of a weight factor here on the market?
Yeah, I mean, they were disappointing. There's no other way around that. We've gotten very used to seeing these soybean sales in particular in the 1 million metric ton to 2 million metric ton range. The fact that we didn't see that could say that, some of that global demand is slowing down. The South American issue, has really been driving that the last 5 or 6 weeks. But I don't know. It doesn't really seem like that's the case to me. It was just sort of a one-off week, and we are at higher prices. I think a lot of global end users were kind of hoping that we would see this correction lower on maybe some better news coming out of the Russia-Ukraine situation. But that really hasn't happened. And, you see this morning, like you were alluding to, we had a reported daily sale of 318,200 metric tons of soybeans delivered to unknown destinations. And that is for 21-22. So old crop beans. All right. We already have a sale on the books for this week that is almost as large as what we saw last week. I don't really feel like that soybean train is slowing down quite yet. I think we're going to have a couple more of these big weeks of soybean sales. And hey, look, it's bringing us very close to 100% of the USDA's estimate for exports for this marketing year. Eventually, I believe the USDA is going to have to increase that export number, decrease the ending stocks number. The crush number might actually go higher as well. And we are barreling towards a situation in soybeans where we're going to look at each other and say, we are very possibly going to run out of soybeans between now and the end of the marketing year. And then we start talking about price rationing, and we have not only not been able to do it at $17, but seemingly demand has increased at $17 soybeans. So this could be a very interesting setup, or there is a very interesting setup, and it could be a very interesting spring into early summer.
Yeah, we have some big reports coming out next Thursday. I'll remind everybody at the end of the month here in March, we're going to have a quarterly stocks report and the prospective plannings report at the same time. Let's review our current prices then, and one has to wonder how much positioning is already starting to take place here ahead of the report's release. May corn is going down by 8.5 cents today. We're at $7.49 in December. The new crop down 5.25 cents right now. In the soybean trade, our quotes provided by bar chart show May 6 lower at 17.12 New crop November down 6.25. It's at 15.01 3/4. So not really any spread change between the nearby and new crop in the beans today. May Chicago wheat 13.75 lower at 10.92. They're really selling the front months in the Chicago wheat today, so they're kind of bear spreading that thing. If you look at the Kansas City market, the May contract down 8.25 at 11.03 July down 7.75. Same story here, bear spreading apparent in the Kansas City market, more selling on the front. And in the Minneapolis market, same thing. May down 3.75 at 10.85.5. July down 1.75, but the deferreds are actually 1 to 3.5 higher. Isn't that interesting? Well, we'll come back in a moment and we'll talk with Ted about our livestock trade when we come back. Now we look at the livestock trade with Ted Seifried. Let's start with live cattle. And on the live cattle futures, we're still higher across the board. April up 37, but the June is leading the way. It's up 87 cents now. We're at 136.85, and you know what? That is matching the high of the day. Over on the feeder cattle trade, we have the April contract 90 higher. We're at 162.67, and that would be off of our earlier low of the day by about 95 cents or so. We have the May contract up $1.50. That's showing the biggest gain in all the contracts here on the feeders. And if you look at the lean hog market, at the moment anyway, we have the April 17 cents higher at 102.72, but all the other months are lower. We have the May down $0.50 now at 114.15. So the hog market kind of struggling today. It seems to go about every other day, up and down, sometimes in a big way. Let's go back to Ted Seifried here. Ted, I saw where the cash cattle trade established itself yesterday, but live basis sales just kind of flat, but breast basis sales were a little bit firmer in some areas, maybe a little lower in other areas, so it seems kind of confusing.
Yeah, let's call it flat. I mean, that's really the best takeaway that you got for the cash trade, and not terribly surprising. I mean, there's a lot of concern with, especially with crude oil really rebounding off the low that, or the correction low that we just had. It's really bringing back the conversation of, are people going to be spending less money at their butcher? Are they going to be spending less money on the especially the choice cuts of meats? There's nervousness about demand. Now, I think that nervousness is going to be unfounded. We're going to prove the doubters wrong. I'm really optimistic about this grilling season that we're just now about to get into, spring into summer. Again, I think domestic demand is going to be really good. And then look at export sales this morning. I mean, marketing near high in beef, and then also some late reporting sales. That was a really healthy number as well. China is on the books. So, a little bit of strength in the cattle today. Corn being down is definitely helping the feeder cattle a little bit. And then if you look at the charts for feeder cattle and for live cattle, it looks really nice. I mean, it looks like, we had the correction after we put in those mid-February highs. Then we had our lows in the beginning of March. We bounced off those lows. We've been kind of holding near mid-range, but the price action is acting like it wants to go back up and try those highs again. So maybe we are soothing some of the doubters of the demand out there. Cash cattle, I think, has room to go higher as box beef prices, in my opinion, will continue to start coming back off of their lows. So I'm optimistic there. And I want to say something similar about the hogs, although technically speaking, we're having a little bit of a harder time getting up and off the mat. We are just kind of holding down near the lower end of the range on very key support. I want to be optimistic there. Export sales were decent for hogs today. Not amazing, but decent. And again, I think that grilling season demand is going to be really good this year. So, yeah, I think there's room for upside potential. The one thing I will say is that June cattle contract bugs me just a little bit. If I want to be looking at reownership strategies or speculative long positions in the cattle, I want to go to August or further out because the drought monitor scares me. At some point, we could see a lot of cattle come to market up front, just as guys want to get off of the non-existent pasture and not deal with the really fairly high corn prices.
Yeah, that's exactly right, and I echo those sentiments. Yeah, a lot of concern about that, that's for sure. And we're warming up again, too. Ted, thank you for the comments today. Ted Seifried of Zaner Ag Hedge with us from Chicago. Janet, it's all yours.